Hey, what's up, everyone? My name is Ale. Welcome back to my world of stocks. Hope you're all doing well out there. We've got a difficult situation going on in the world right now. As of recording this video, we have a very weak macro economy that is still trying to recover from all the insane spending that we've been doing during the global health issue and with the lockdowns and everything else going on. On top of that, we have some global conflicts escalating. Of course, you've probably been watching the news. You know what's going on with Russia and Ukraine. By the way, my thoughts and prayers go out to anyone that has been affected by that and all the other things that are going on in the world. It's heartbreaking. I really hope things de escalate. But as of right now, things have been kind of escalating, and it's unfortunate, but tensions are rising. We're not really sure how this will all play out. Some people are very worried that it could lead to a much larger war, which would of course be horrible for the global economy and for the stock market and for people's lives in general. There's so many bad things that would happen with that. So that's kind of the fear right now that we're going through. And then, of course, you still have rising tensions with China. Who knows if China tries to start doing some stuff? Maybe they use this as a distraction to start doing stuff with Taiwan. There's all kinds of different things that could happen from here that could escalate things. Again, I really hope things de escalate, but as of right now, things have been getting worse. And I want to make a separate video on a lot of that stuff because I do think it's important to keep track of and in terms of how it relates to the stock market, because this is, of course, a stock market related channel. But I'll do a separate video on the stock market as a broader video topic. But just looking at it right now as it stands, we're essentially in a correction because the S&P 500 is down over 13%. You've got the tech-heavy Nasdaq down about 20% from its highs, which is a bear market, and a lot of people would even consider that a full-on crash. Now, it does take me a couple days to record these videos, and there's going to be huge volatility in the stock market. You could see huge swings to either direction, and of course individual stocks too. So make sure you go and check actual stock prices if you're watching this. But just as of recording this video, that's where we are right now. The stock market in general has definitely been trending downwards. And when you look at individual stocks, there are so many of them that have just been getting absolutely destroyed in this market environment. Tons of stocks have been crashing by very large amounts. So in today's video, I want to talk to you guys about 7 stocks that I plan to buy during this market downturn. Now, I always have to stress this. Do your own research, make your own decisions. Don't ever copy me because we might not be the same type of investor. I'm someone who likes to buy in very small amounts when a stock is going down. And even if it's crashing heavily, I like to keep buying more and more as it drops, but in small amounts, and then kind of ride the wave back up when things ideally get better. And so I have that long-term mindset. So I can stomach a falling stock price and seeing my value go down because I have the long-term mindset that I'll just lower my cost basis and then eventually I'll make a lot of profit on it. But some people don't like that strategy. It doesn't work for some people. So just make sure that you do your own research. And again, don't copy me with any of the stocks that I'm mentioning here. Buy the stocks that you want to buy. I'm just letting you know what I plan to do as things continue to get worse because we don't know where this is headed. It could end up being that the stock market crashes very heavily if things really escalate, or maybe things start to de-escalate and there's more conflict resolution and then things start to improve and maybe the stock market starts to recover. It's kind of anyone's guess. Again, I'll make a separate video for that type of topic, but as of right now, these are just some stocks that are already crashing very heavily. They're down huge. A lot of these are falling knives, and I like to buy some of these in very small amounts and have a long-term mindset for them. So that's what I'm going to talk to you guys in today's video. We got to do a kind of rapid fire because it's 7 stocks in total, so we got to run through them kind of quickly. But I hope you guys enjoy this video. Hit the like button if you do. It means the world to me, really helps the channel. And again, I hope you're all doing well out there. Thoughts and prayers to everyone. But with that said, let's jump into this list. Okay, so in no particular order, let's just count down from number 7, and we're going to start with Alibaba, ticker symbol BABA. And as you guys know, Alibaba has been getting absolutely crushed lately because of not just the macro economy and not just the rising conflicts and tensions in Asia and the Europe area and so on, but also because of Chinese regulatory fines that have literally been costing Alibaba billions of dollars. As a result, the stock has been crashing for a while. It initially soared to more than $300 a share during the 2020 lockdowns because, people were relying so heavily on it for their online shopping and so on. But since then, the stock has cratered all the way down to just about $100 a share, losing around 70% of its value. That's huge. And I'm sorry, but I just feel that such a gigantic crash for a company that is so similarly structured and dominant to something like Amazon, but just being kind of the Chinese version of it. In my opinion, that large of a crash is not really warranted. Amazon dominates online retail while Alibaba controls the most market share in China at almost half of the entire market. Amazon also dominates cloud computing while Alibaba has the largest market share in China at almost 40%. They're even becoming a larger digital advertising player just like Amazon too. And despite the already massive size, their sales are still growing at over 20% a year. Now granted, they're not as profitable or low risk as Amazon. I totally get that. But with a P/E ratio that is around 4 times cheaper, I just think the stock is worth, looking into or buying like I'm doing for the long term. Even with the issues of the Chinese government, I just think in the end, China really needs them to be successful. And my hope is that things will bounce back along with the stock. In the end, these kind of global conflicts, it doesn't really benefit the whole world so much. So I'm hoping things de-escalate and then hopefully Alibaba starts to perform better as well and the other issues get resolved as well. Anyway, next up, let's move on to a much safer stock. This is definitely safer, and yet it's still looking like a really good value to me, and that is Google, ticker symbol GOG or GOGL. And you're talking about the most used internet browser here in Chrome, the most used website in Google, the most used email in Gmail, the most used video platform in YouTube, the most used navigation platform in Maps, the most used mobile operating system in Android, and the most market share of digital advertising too. I mean, when it comes to internet usage, Google completely dominates the space and they know virtually everything about you, which makes all of that data extremely valuable. It's one of the reasons why sales are still expected to grow by close to 20% this year to a monstrous over $300 billion. And that's even after they already skyrocketed by over 40% last year as well. And close to 100 billion of that went straight to operating cash flow profit, which is about double where it was just a couple years ago. And yet the stock is still trading at around the same or even lower valuation than it was back then. That's pretty crazy. Don't get me wrong, the stock price itself is still up a lot over the years as it rarely ever falls, but with the most recent dip of over 15%, leaving their PEG ratio at less than 1, which is not only incredible, like very, very cheap for their size, but it's also way cheaper than most similar companies out there. I just think that right now is a decent time for me to start building up a position in Google and holding it long term. I just recently started buying it and I plan to keep buying it here. All right, now those two previous stocks did not have anything to do with dividends, but for stock number 5, I'm going to supplement my dividend portfolio with some medicine from Merck, ticker symbol MRK. And really over the past year or so, biopharmaceuticals is where I've found some of the most attractive dividends, primarily from stocks like Pfizer, AbbVie, Bristol Myers, and of course Merck. I own all 4 of those, by the way. But when I compare all of them at today's prices, Merck comes in second on the yield at 3.6%, which is only slightly behind AbbVie. And there may be good reason to prefer AbbVie over Merck, for sure, I can understand that, but I already own a very large position in AbbVie, whose stock is currently trading near an all-time high, whereas with Merck, I have a very small position, and the overall stock is currently down around 17% from its highs, and is even negative over the past 3 years. Now, financials are nothing crazy as they typically have very low growth, but they're at least reliable, usually doing tens of billions of dollars in sales and sometimes profits too. And this year is expected to see revenue climb by a whopping 18% before they have a small correction the year after. But the pipeline is huge with almost 100 different products in development, including, by the way, a new pill for the pepperoni that is showing some promise in clinical trials. So with a nice dividend, and the low stock price that continues to kind of struggle and drop, which by the way leaves them trading around 50% cheaper than the sector, I just think that the stock is worth buying when I see these larger dips. So that's kind of how I play Merck. All right, now moving on to stock number 4, I'm actually going to go with a very speculative stock that has been crashing so much lately, but one that I do still think has a lot of future potential in the medical space, and I do think they can turn things around, and that is Teladoc Health, ticker symbol TDOC. I just say TDOC. But they specialize in telemedicine. They help doctors treat their patients virtually through the phone or internet. And I just think that's going to be a gigantic market in the future, considering where things are kind of going in the world right now, how everything seems to be heading towards heavier internet usage, more virtual connections, which, by the way, is not a future that I'm excited about myself. I really don't like that stuff. But things like remote work and online shopping and virtual reality, those seem to be growing trends. And with how people react to pandemics, and you look at how much faster and convenient telemedicine can be, I just think it's going to be a growing market over the long term. In fact, according to Fortune Business Insights, the telehealth market is expected to grow by over 30% a year, reaching well over $500 billion by 2028. And despite Teladoc already commanding the most market share, it's only at around 13%. So there's plenty of room for them to keep growing there, especially considering that they only did about a billion in sales last year. But as you can see there, profits have been an issue, and that coupled with the economy reopening and a shrinking hype, I would say, for telemedicine, along with the fact that the stock market in general is just getting crushed, and you're seeing a lot of unprofitable companies taking the biggest hits because of all the risk. Investors just don't want to be buying a lot of risky stocks right now. So the result is that Teladoc stock has now fallen from almost $300 a share all the way down to just $60, which is a crash of almost 80%. That is huge. Now, Teladoc is very risky because it's a growing company that is unprofitable in a market that wants nothing to do with these type of stocks. But I'll probably continue to be buying this one, even though I do think that it's going to be a falling knife. You're talking about almost 100% growth in each of the past 2 years, and still another 30% growth next fiscal year too. These type of growth stocks tend to take the biggest hits during market downturns, but they can sometimes skyrocket when the market recovers. So that's what I'm really hoping for myself, and I think I'll be buying into this crash very slowly in small amounts, and just kind of hold it long term and hope that things get better with it. Okay, now to balance out that high risk, I am also buying some more of Microsoft, ticker symbol MSFT, which is my number one largest stock. And I would argue that this is one of the most stable and safest stock options in the entire market if you're looking for something safer. I mean, you're talking about an extremely reliable business with growth of around 10 to 20%, despite doing almost $200 billion in sales this year, and probably around $70 billion will go straight to the bottom line, which is just massive. This allows them to make huge acquisitions that greatly benefit the company over the long term, like the deal that they made for business networking site LinkedIn for over $26 billion, or the one they made for coding site GitHub for over $7 billion, or the most recent one that they made for gaming giant Activision Blizzard for about $70 billion, which, by the way, was a deal that was made all in cash. I mean, show me how many other companies can make $70 billion acquisitions in just cash alone. That's crazy. Meanwhile, they dominate a ton of different markets that I've already talked heavily about in previous videos, and the stock even pays a nice little dividend of close to 1% with some excellent growth metrics on it. The stock is still not cheap because it's one of the most stable out there that rarely ever dips, but during this market downturn, it's actually down close to 20% as of recording this video from the highs, and it's slightly in the bottom half of its 52-week range, which is generally, that tends to be a good buying time for Microsoft. So not really much more to say. I'm buying a little more of this stock here, and I will continue to hold it long term, and if it falls more, I'll be buying more. Anyway, that was a much more stable stock. So for stock number 2, oh man, I hate to do this, but let's go right back into a super risky, highly speculative stock. And for this one, we're gonna go with Palantir Technologies, ticker symbol PLTR. And there's no way to sugarcoat this one, guys. I've been buying it in recent months, and I've been talking about it on the channel, but it just continues to crash and crash. At this point, it's absolutely a falling knife, having already crashed by over 67% just from its 52-week high alone. And it crashed even more if you go back, like further back before that. And I think there's a very real chance that we could see this stock hit the single digits at some point if the market continues to struggle, which I don't think has happened since like they IPO'd. And there's several reasons for this. Of course, you're talking the market downturn in general, but also the fact that they are not profitable and their losses are very substantial year after year, especially in relation to their sales. Sometimes they're even like about the same. And then on top of all of that, investors are worried that Palantir relies too heavily on government contracts for their business, which could run out at any moment if, for example, the US government and the military, they just start to if they decide to like start giving contracts out to their competitors, that could really hurt Palantir. So that's a very real concern. But I just think Palantir does a good job of data management and artificial intelligence. They're so skilled there that I feel that whenever a new contract is being awarded in their market, I feel like I tend to see it usually always going to Palantir. And I just think that they have a strong competitive advantage at this point. And I don't know, I do really believe in them. It's hard to know exactly what the market share is for them because of how much of a niche player they are, specializing in more kind of critical data work while being in a much larger, gigantic data analytics market where they're only considered to have around 1% market share by Datanyze. But you can't really go by that. If you actually look deeper into it, you'll find that they consistently get awarded huge contracts, many times worth hundreds of millions of dollars each. And last year, their customer count grew by a massive 71%. And most of that growth actually came from their commercial segment that doesn't have anything to do with government contracts, which, by the way, grew by a whopping 200%. And in the US specifically, it grew by closer to 400%. So it's really ramping up. And you can see that in their commercial sales increasing every quarter. These are specific to the US, but it's going from 72% to 90% to 103 to 132%. Now, granted, that specific US commercial segment, it's only around 13% of their overall business, but it's been increasing every year, which means that they're slowly diversifying. I get that investors aren't patient enough to wait for that, but for me who thinks long term, I think it's a good direction that they're heading towards. Meanwhile, total sales are growing by around 30 to 40% a year, and while the stock keeps falling, I just like to keep buying in small amounts. Again, this is a falling knife that will very likely keep falling. At least that's how it's been going so far. So if you don't have the stomach to see your investment sinking in value all the time, you probably want to look for something else. But for me, I'm thinking very long term with this one. It's such a small position at only around 1% of my portfolio. I can stomach the falling price, and I can keep buying with a long-term mindset. Okay, finally, that brings us to the last stock on the list. And you've probably guessed what this one is already because I've been talking a lot about it on the channel lately too. And it's also a very new position for me, but that is Facebook parent company Meta, ticker symbol FB. And I'll keep it short to not repeat myself too much, but across all their platforms, you're now talking about over 3.5 billion users. And then you look at the markets that they operate in, you're talking digital advertising growing to almost $700 billion and the metaverse reaching $800 billion over the coming years, which Meta has a very good shot of dominating or at least heavily competing in both of those gigantic markets. And that doesn't even include all the ancillary markets that you could look at, like online shopping, business, entertainment, virtual reality, hardware, and services. There's a number of different ways that Meta could generate sales from here. And right now, Meta already makes around 120 billion, which is definitely a huge amount, but they have an opportunity to multiply that maybe even a couple times over if you're thinking very long term. And considering how profitable they are with about 40 billion of net income last year alone, I think there's a lot of potential there. Of course, there is also a lot of risk. Facebook as a platform is probably going to be in heavy decline over the coming years, or at least substantial decline in the coming years, and that's going to hurt their financials while they burn cash on building out the metaverse. But at this point, I just think the risk reward ratio is too attractive to ignore after the stock has already crashed to the bottom of its 52-week range and lost close to half of its entire value, leaving it now at a P ratio of less than 15. It's one of the cheapest valuations I've ever seen for Facebook myself. Again, the risk is high. The stock is yet another falling knife in today's video. I know I gave you a bunch of them, but this is a small position for me right now, and I think it's a good value. And I recently started buying it for the first time ever, and I plan to continue to buy it as it falls, again, in small amounts, slowly build it up into a larger position for the long term. But anyway, that does it for today's video. Let me know what you guys think about the stocks I mentioned. Do you agree or disagree with any of the things I said? Are there any stocks that you guys are buying? Let me know down in the comment section because I would love to make a video on the stocks that you guys are buying. I think that'd be a very fun video to make. So let me know down there below. Are you buying anything right now? Or is this market environment just too scary for you and you'd rather just kind of sit this one out and wait for things to improve in the world? I think that's a very fair argument to make too, a very fair strategy. But I'd love to hear your thoughts. Let me know down there below. And I'll catch you guys in the next one. Hope you're all doing well. Stay safe out there. Again, thoughts and prayers to all the people being affected by everything that's going on in the world. and I will see you in the next video. Take care. Bye-bye.